everybody. Welcome to our HOA webinar. I am Michelle LeBlanc. I'm the Executive Director of CAI Greater Los Angeles Chapter, and we are so happy to have you on tonight. I need to thank two of our sponsors who are sponsoring gift cards tonight is the Nauman Law Firm and PCW Contracting Services. So please stay till the end. I want to hand it over to our speakers now to introduce themselves and get the topic started.
Great. Thank you, Michelle and Andrea. My name is Lisa Tashjian. I'm from Beaumont, Tashjian. We are a full-service law firm for associations all over California. We're a one-stop shop. We provide legal services to all of our clients. That's all we do is represent HOAs. Thank you for coming today. I know this is on everyone's mind, whether you were impacted by the recent fires or not. You have to be ready for these types of disasters, and we're hoping we're going to be able to give you some tools today to help you address your current situation or any future situation that may come up. April?
Hi, everybody. My name is April Barlow. I am the owner and general manager of Servpro of Burbank, as well as two other Servpro franchises. I'm on tonight with my teammate, Robbie Garcia, who many of you know. We are longtime members of CAI and very knowledgeable. We've had a lot of years working in the HOA industry, so we sort of speak your language, as I like to say. So we are obviously here as the restoration provider tonight, and I just want to mention we're really going to try to keep our comments focused to this particular wildfire event, not necessarily your general house fires and things of that nature. We are going to kind of try to keep it focused to this particular event that we're all going through. And yeah, we're here happy to answer any questions at the end when we get through the presentation, and hopefully we can give you guys some good information.
Hi, my name is Ryan Gesell. I'm from the Cline Agency Insurance Brokers. I'm new to this whole HOA thing, but apparently it's big business. Just kidding. All we do is HOAs. We've done this since 1998. So we don't do any personal lines, just HOAs. We're hoping we got a lot of great information for you. As you're probably aware, the world of wildfire insurance is at its height right now, and the insurance market is constantly changing. So we're going to try to leave you guys with some good information here. I thought we'd start off with some stats that I think are pretty jarring. The Palisades and the Eaton fires, approximately 40,000 acres were burned, 29 people were killed. We estimate 250 billion in economic losses. More than 16,000 structures were destroyed, mostly residential structures. To put that in perspective, the Camp Fire, which was in 2018, which burned Paradise, only 13,500 homes burned. Only. That's a lot of homes. 6 years later, only 2,500 of those homes have been built. Now, probably a lot of those folks decided not to build because they're surrounded by woods. I imagine that was terrifying, but I don't know the relationship. So it's kind of jarring that only 25 of those 100 of those homes have been built. We estimate the insured losses for just these two fires to be between 28 billion and 50 billion. We really don't know yet. Now, I thought this was really interesting because most insurance carriers use a program called RMS, Risk Management Solutions. They all have their own proprietary software as well that gives them, they try to get a one-up on their competition, but essentially they're using these algorithms and this software to figure out where the fires are going to go using proximity to brush, using the wind patterns over the last several years, the Santa Ana's obviously being a significant wind force, and they assign a score from 1 to 100, 100 being the highest risk of a score. That's the stuff you see up on Mulholland. Of course, you're surrounded by brush. You're at the top of the hill, the fire burns up. But this community right here that you see in the middle that's got that X on it, that had a risk score of 6 out of 100. Most insurance carriers, even the California admitted carriers, were insuring anything that had a score of 20 and under. To see this with a score of 6 is going to impact the insurance industry significantly. And we're probably going to see those carriers revising their models and shying off of even higher scores. April?
Yep. All right. So first steps after a fire. Again, to kind of speak more to this specific incident, obviously this is very traumatic for people to go through. And probably more than ever, a lot more of us have an awareness of how traumatic it is because so many people were impacted in this particular event. It's very hard when you go through something like this to kind of keep your practical thought process going and kind of think of the steps that you need to take. But you do first and foremost want to contact your insurance company, get your claim filed, and you may need to reach out to local disaster relief agencies. When we reference that, we're talking about FEMA, the Red Cross, maybe looking for donation centers or shelters in your area. You can find a lot of good resources for that, probably through your city or your county. For example, lacounty.gov has a lot of great resources right now for people in our impacted communities. But you do kind of have to put your thinking cap on right away. My brother-in-law, who is my business partner, actually lost his home in Altadena in the fire, and my sister was very mad that he spent the first day filing their claim looking for a home, but he actually was able to secure them a rental because he acted very quickly. So you do want to be mindful of that. Make sure you're locating documents that you're going to need. You're going to want a copy of your insurance policy, your ID, as we've learned, trying to, if you need to get back to your house once you're granted access, you will need forms of ID and proof of ownership of your home to be able to get back into that area. You do also obviously want to make sure that they have deemed the property and the area safe before you go back in.
And April, you just reminded me, you're also going to need, if you're going to try to get a rental, all those documents that the rental company is going to want to see for your finances.
Exactly. Yes. My brother, they were faced with that situation where then he's having to try to round up pay stubs and financials to qualify to secure that rental and get a lease, which some people don't have available to them depending on how severe their loss was. That's the great thing about the digital age is you should be able to reach out to your insurance agent or broker who can get you copies of your policy, and obviously your bank can help you with a lot of the other financials.
Yeah, and if I can just say one thing, just to April's point, you don't want to enter until the fire department has cleared. For CIDs, that's super important because it's the board who determines when the homeowners can come back into the community. And communication, first of all, is key during these types of disasters. So I just want to make sure that you are communicating with your owners, whether that's via Zoom meetings and or email blasts to let them know with the status of the condition of the community. You don't want to let anybody into the community if the common areas are not secure and safe. The debris is not clear, there's no structural issues, as well as the fact that I've been hearing a lot about water that is not, because of the fires, is not good for human consumption and or even bathing. I've had certain communities where they say that you can't even bathe in the water because of the toxins from the burn damage. So again, making sure that we know when we can tell our homeowners that they have the green light to enter back into the community is critical.
That said, don't physically restrain them.
Exactly. But you want to notify them, keep the lines of communication open. And if it's not safe to go in, they need to know that so that there is no potential exposure to the board for not informing them that they should not be re-entering the community.
April, what's the process for repairing a home?
So in a fire damage situation, obviously no two losses are very often alike. But in this particular situation, we do have a lot of properties that have similar levels of damage. In most cases, it's soot and ash that's blown into the home from just being in the burn areas. You might have people that have had actual structure damage. It may have burned. Obviously, most of the homes we saw that burned probably were a total loss. But always, first and foremost, we want to do mitigation, which basically just means, can we stop the bleeding to some extent? Anything that we can do to prevent damage from getting worse, especially in situations where there's water damage from fire hoses. That one, you want to address that first so you don't end up with rot and mold in structure that otherwise would be restorable. Board ups were very common. We did see actually a lot of down trees as well in this particular firestorm where those might need to be removed from the property. And again, you want to be mindful of power lines and things like that. But mitigation is first, to just try to stop the damage. Like Lisa said, issues with the water, lack of power in a lot of these properties is preventing us from being able to start cleaning very quickly, because obviously we need those resources and able to be able to clean. But there are usually some steps that we can take to mitigate in the meantime. Then we're going to move into actual detailed cleaning. We're going to clean the structure. If there are any burnt materials, those need to be removed. They're going to hold odors. They're going to potentially lead to further damages. So we're going to want to get rid of that.
And they're carcinogenic, right?
They can be. So yes, there's a lot of questions about that. I am not an industrial hygienist or an environmental professional. I know a lot of people right now have questions about the toxins in the smoke or the ash. A lot of times when things have burnt, some of the contaminants will be removed just through that process. But there are companies that can perform testing on those types of things. But yes, anytime you're going to remove materials from an intact structure, depending on the age of the home, you may need to test those for asbestos and lead prior to removal. So you do want to be mindful of that. Along with cleaning of the structure and removal of damaged materials, we're also going to clean contents. This can get tricky with HOAs where there are different coverages for structure or contents, different elements of the structure. So if you are an HOA manager and you have boards reaching out to you asking about cleaning, please be sure you review your CCNRs and give all of the homeowners a very clear answer as to what they are responsible for through either their own out of pocket or their insurance and what the HOA covers. We see huge variations in that with who might cover duct cleaning, insulation removal from the attics, and then exterior pressure washing and things like that typically are on the
Lisa's
HOA.
going to discuss that later.
She's going to get into that.
Yeah.
Specialty restoration service, that's usually going to be your electronics. Clothing and textiles may have to be sent out to a specialized cleaner, but they're out there. So if you need someone for any of those types of items, those may have to be sent out from the home, but most of your other things can be cleaned on site. And then if there is structural damage, restoration or reconstruction would be the final step of doing any build back. If smoke damage was too heavy, that might entail sealing and painting walls to trap in any residual odor or replacing insulation like I mentioned earlier.
Let's talk about the claims process. April mentioned contact your broker ASAP. And for this particular fire, you know, that many folks, 16,000 homes, you got to get in line as soon as you can. You probably remember Katrina, and a lot of our emergency services folks from California and our loss adjusters went out to Louisiana to try to help. We simply do not have enough adjusters to deal with this level of loss. We don't have enough adjusters. We don't have enough time to address all these in a timely manner. So all those folks are going to come in and hopefully help. You got to assign one point of contact. You don't need all 5 board members dealing with this loss adjuster. That's not going to do you any good. It's going to confuse the process. If that's your manager, great. Your managers have other communities that they're trying to manage, though. So probably one board member that's going to be the liaison with that adjuster, and they can relay whatever the board's wishes are or questions are. They have to be that liaison. Construction consultants are a common question we're getting right now, you know, and independent loss adjusters. I would say I would lean towards the construction consultants, you know, like we have several in CAI that are chapter members. And what they do is they don't actually do the reconstruction. They're just the construction experts. They're putting together that bid. They're putting that RFP together, and they're sending it to all the contractors that you want to deal with or you're interested in. In this case, it's probably going to be a battle to find a contractor, but you want to get bids from multiple sources, as you're obligated to do as a board with fiduciary duty. So they could be a real help for you in guiding you through this process. Independent adjusters are going to take a percentage of whatever you get from the insurance company. So we had a loss that was $22 million. They're going to take 10% of that. That's a lot of money that you're missing. I don't know. Maybe it's not 10%. I can't speak to that. I'm not an independent adjuster, but I would be wary of that. Maybe that is the best option for you, but something to consider.
Well, can I just add something there, Ryan?
Absolutely.
Yeah, I totally agree with you. Just on the concept of a public adjuster, I've gotten this question a lot since these recent fires, and there are pros and cons. And Ryan just hit the main one on the head, which is a public adjuster because they take a commission, whatever that percentage is. What we have seen when we've seen fires that are not necessarily natural disasters, but a fire that is set by a homeowner accidentally that burns down the entire community, when they have hired a public adjuster, those types of claims drag out a lot longer because of that percentage. They're chasing their percentage. They know that the bigger payoff they get for you, the bigger payoff it is for them. And the biggest complaint I get from clients that have used independent adjusters is that they delay the claim and they drag it out. So again, it's something to consider, pros and cons for using it, but it's something that you just need to be aware that it could end up dragging the claim out.
Yeah, Lisa, I want to add to that a little just to clarify. An independent adjuster is typically hired by the insurance company when they don't have capacity to handle all of the claims. A public adjuster is hired by the policyholder or the homeowner or maybe the board in this situation.
Okay.
Yeah, please don't jump to that because they're coming knocking on your door and because your
Right.
adjuster hasn't answered 3 phone calls. They're so overwhelmed right now, like Ryan said, nobody has the bandwidth to handle a situation like this, but give your
Right.
insurance a chance to take care of you and do the right thing. Because like Lisa said, a public adjuster's goal is to get you to the policy limit. And if by any chance the board or the homeowner is not adequately insured, that means you're going to be losing some of your coverage money when they take their 10% is pretty much the standard, if not more.
I
So
agree.
give your insurance company a chance to work with you. In 30 years, I've certainly seen situations where I think a public adjuster is appropriate, but it's you really need to be kind of at the end of that. And I would maybe ask around, talk to your broker or your agent before you go to that route.
And
I
the other side
agree.
of that, a lot of folks look at the insurance carriers and the adjusters as the enemy, and they're not. They're also looking out for their best interest, but also your best interest because we are seeing demand surge. So they don't want a contractor to come in and give you a bid that's astronomical when the cost of the goods that they are quoting is not what they say it is. So they're trying to keep the claim as low as possible, but to your benefit as well. They're going to pay out what they're obligated to pay out, but they don't want folks taking advantage of you, which unfortunately is probably going to happen a lot in the current circumstances. Don't admit responsibility. Whatever you do, do not. If you've got owners saying, "Hey, this happened to my house. Who's going to take care of this?" You do not admit responsibility. It's up to the adjusters, the personal lines adjuster, and the carrier master policy adjuster to adjust that loss. That's their job. They will talk to each other. The board does not want to take on the role of being an adjuster because if you promise something and it's not delivered, then we're going to see a liability claim, and we don't want that. As April said, set your expectations on the timing of the construction, the timing of the adjusters, the permits, the debris removal. This is our Katrina. This is unprecedented. We've never seen this level of loss in California. The Northridge earthquake happened 1994. That was a long time ago. And in today's dollars, it's not going to be what this loss is. It was about $23 billion in today's dollars. We're looking at probably 30 to 50, somewhere in there. It's a lot more damage. So we've got to set our expectations. Understandably, you'd be upset if the adjuster is not reaching out to you, but just know the level of work that they have on their plates right now.
Okay, so this is one where I'm going to give you an answer that's kind of a non-answer because there, again, no two jobs are alike. But in this particular situation where we're mostly talking about cleaning of soot and ash that has come in from an outdoor wildfire, if we are just talking about a cleaning process, and I'm thinking mostly of HOAs and condos, your typical residential home that's 2 to 4 bedrooms, an interior clean will probably take, I would say, 3 to 5 days, depending on the amount of contents that people have, how well they kept their house prior to the loss, because we're not always just cleaning what is coming from the smoke. But if you have reconstruction that's going to happen, then it can vary tremendously. I would just say if you're looking for temporary housing, just make sure that you set realistic expectations again. And if you have construction repairs, we do construction, but my rule of thumb is usually whatever the contractor tells you it's going to take, double it. If they say it's going to take 2 months, expect it to take 4. And sometimes that's just things that are out of their control as well. As far as permits, there's a lot of concerns right now about access to building materials and labor coming with how much rebuild there's going to be needed. So it can vary tremendously, but if we're talking about just cleaning to get people back into their homes to be able to live there, once they have full access and utilities, that should be able to happen in about a week.
April, I was talking to somebody, a loss adjuster for State Farm, that was telling me that before the wildfires, 12 to 18 months was a really good turnaround for reconstruction. And now,
if you're talking about a pretty large rebuild or a total rebuild,
yes,
yeah.
But now, and that was for a really good contractor, not the normal contractors. So now we're probably talking double that.
Yeah.
And
So
that's why
set
communication
realistic
is important.
expectations.
Yeah, and that's why communication with the owners is critical. I will just tell you, as an HOA attorney, what I'm getting from boards is they're getting pressure from their homeowners. Like, when is this going to be done? What's happening? And they're getting the most stress from homeowners. So it's about communicating. And one of my communities is like a model. They've already had 3 Zoom meetings. They send out at least an email a week, if not multiple times a week, to the owners. So being super engaged and managing those expectations is going to take a lot of stress off the board and management if we don't have homeowners also pounding on our doors saying, when are we going to get back in, and what are you doing, and what's the status? Keeping them informed and keeping the communication open is critical. But some requests that we're getting from homeowners, it kind of takes us back to the COVID requests when COVID hit. Whenever a disaster happens, right, people always say, they want concessions. They want to have some variance from requirements. So the 2 biggest ones that we've seen since these massive fires is, one, homeowners requesting some sort of relief or abatement of their assessments during this fire. And, I want to be, and of course, your heart as a human being, you want to say, yeah, you don't have to pay. You're not living here. You don't have to pay. But you have to understand, as boards have a fiduciary obligation, because the association is not only a residency, but it's also a business. And the civil code is clear. And that's why I have that on this slide, which is, associations shall levy regular and special assessments sufficient to perform its obligations, meaning defray the costs of operating the association. So unfortunately, just because there's a fire and a lot or the entire community is burned, there are still bills that are ongoing. So before you say, yes, let's just stop the assessments, because that is going to put you in a worse situation, let's assess what our costs are ongoing, how long the rebuild is estimated to take, and if the costs of the association are going to be less than what they normally are, we can consider maybe some sort of reduction or a temporary, lowering of those assessments for a certain number of months. But to blindly say, yeah, no one has to pay assessments since no one can live here, is not the right answer. You're still paying for certain expenses, including your insurance premiums, that have to get paid. So that's really something you should talk to your own independent legal counsel with, and talk about it with your CPA, and to look at your budget and see what costs, how long is this rebuild going to take, or the repair of the damages? Is there going to be a reduction in the costs for operating the HOA? And does it make sense to reduce assessments to give some people some monetary relief while still making sure the association, for the bills that are ongoing, are being paid?
And it might be lowered now, that you don't have the landscaper because there's no landscaping to do, but later on they might be significantly higher.
Exactly. So it's really a case-by-case of evaluation. And so boards should really consult legal counsel before agreeing to any type of reduction. Because to Ryan's point, if you lower it now, you might be in a worse situation later. So it's not always the right thing to do. The other question we're getting a lot of is associations that not necessarily were burned or had major damage. They're still occupied, but saying, you know what? All our community around us, other associations, other homes were damaged or burnt, and people need temporary living. What do you think, Lisa, about relaxing our rental restrictions because we have a rental cap or we don't allow for anything less than a 30-day rental period? Should we relax those and allow these people who were impacted by the fire to move into our community? And the answer is yes, of course. Let's be good neighbors, right? We got very similar questions during the pandemic when people had no parking RVs like on the street, but there were first responders who couldn't go into their homes and were living in their RVs while being first responders so as not to expose their family, and they had a no parking on the street rule. We're like, of course you let them park, right? We're a
Right.
community. First and foremost, let's put humanity first. So yes, temporary relaxation of your rental restrictions to help others in your neighborhood is a great idea. And that would obviously also get you really good press if that ever ended up on TV. You don't want to be the community that says, no, you can't come in. No, we have a rental restriction when people are suffering and dealing with this catastrophic loss.
That leads us to demand surge. Demand surge is the sudden increase in expenses for rebuilding materials and labor costs because of this dramatic event that happened. All of a sudden, the demand is much higher than the supply. So the building materials are going to be significantly higher than they were before these wildfires. The labor costs are going to be tremendous because we're going to have, to Lisa's point, all these, we don't have enough contractors. We don't have enough contractors in Los Angeles to work on this. Contractors from other states are going to be coming in to help, and we're going to need them. But those folks need a place to live as well. So they're going to have to charge more to relocate all their folks. So the cost of labor is going to go up. Now we've got an administration that is taking steps against illegal immigrants. They estimate that 40% of the construction workforce are illegal immigrants. If a tremendous amount of those folks get deported, that could significantly drive up the cost of labor. Before the fires, they say it was about $200 to $300 per square foot residential average to rebuild. Now, I talked to the State Farm adjuster I mentioned who does high value homes in the Palisades, and he said it's looking to be about $800 to $1,000 a square foot, which is dramatically higher and nothing that anybody had contemplated. If we saw a community that was insured for $400 a square foot, we thought, wow, that's really high. Not anymore. Even if your community did not sustain any damage, you need to talk about increasing your property limits, and you're going to have to pay more premium for it. But if you had a small fire or a total loss because of anything that's not a national wildfire, we're in January. We could have more wildfires in Los Angeles. We're probably going to have more wildfires. This is our wettest month. So let's say it gets to September, October, which are our hottest months, and you've got another wildfire that takes out a community. Whatever you're insured for now is not going to be enough to rebuild your entire community at the time of that loss. So I would talk to your broker about increasing your property limits, as well as the additional living expenses on your personal lines policy. Because as we mentioned earlier, the cost of renting a place right now is skyrocketing. People are taking advantage of the demand, which is just human nature, might not be ethical, but it's what people are going to do. They take advantage of you. They're going to increase the cost of that rent. Finding a place to stay could be harder than ever. So those additional living expenses, talk to your personal lines agent, and they can help you increase them to a better limit. Let's talk about, did you want to add something, Lisa?
Oh, no.
Okay, let's talk about rebuilding versus not rebuilding.
Right. And this may be a little premature right now. I don't know if all communities know if they're going to, and those are ones that were massively damaged or substantially damaged, whether they're going to rebuild or not. There's a lot that goes into it. This is very complicated. First of all, it's rebuilding. The process for rebuilding when you have partial or total destruction is really specific to every community. Okay, every set of CCNRs has a provision, an article actually, based on rebuild for massive destruction or partial destruction. So every set of documents is different as to what the protocol is and the process is. For example, I just randomly, for tonight's purposes, just picked one of my clients' CCNRs randomly to look at their reconstruction article. And their article says that if the cost to reconstruct the common area, so what's important to know, let me just back up. When we're talking about rebuild versus not rebuilding for the purposes of HOAs and boards making decisions, that's about the common area. So the association deals with the common area. And most times when you're in condominiums, the entire structure is common area. The only thing that's owned by the owners is the airspace and potentially the interior surfaces of the walls, ceilings, and floors. So you have to determine what do you have to rebuild as far as the association is considered. You know, what is their responsibility? And each provision for reconstruction of a total disaster or total rebuild, I just pulled up one of my clients randomly, and theirs was if the cost to reconstruct the common area minus the insurance proceeds that is received by the association is less than or equal to 3 times the total operating budget of the association, then the board can move forward with the reconstruction without owner approval. And they can levy an assessment against the homeowners for anything that's not covered by insurance. Not all documents say that. There's different thresholds, there's different protocols. So it's really important, if you are considering rebuilding versus not rebuilding, you really need to consult your legal counsel to find out what are those thresholds. When do we need to seek homeowner approval? Do we need to move forward with, giving notice that we're not going to rebuild if that vote fails? And what is the process for dissolving the community and or distributing insurance funds? It's a very complicated process. If the owners vote to not rebuild, then there's a process that's involved that's very detailed and very legal. You have to record with the LA County recorders a notice that this community will not be rebuilt. You need to then consider what insurance proceeds you have, as well as what's left in your reserves. You're going to divvy it up, but you also don't just give it to the homeowners. There's like banks that have mortgages on these homes that have a first right to get that money. So we have to now involve all the first lenders, the potentially second lenders into the community, and determine how that money will be divided, not only per owner, but per lender, if there are lenders involved with a specific unit. So it's a very complicated process that you really need to discuss with legal counsel, but understand that you really can't even go down this road of determining if you are going to rebuild or not until you first determine what your insurance is going to pay, right? You need to know what they're going to pay for, how much they're going to pay, how much do we have in our reserves that we can put towards any rebuild. So those elements have to be determined and put into the equation of whether what's left at the end of the day with the insurance proceeds, with our reserve account. What is there an overage that the homeowners would have to pay to rebuild? Is it reasonable to ask them for it? Is it reasonable to do an assessment? You can definitely do an emergency assessment for that overage, but first of all, you want to make sure you're following your documents in that rebuild process. If there's a vote that needs to be taken of the members, like I said in this example, where there is a threshold where you have to get member approval if the cost to rebuild is going to exceed a certain dollar amount over the insurance proceeds.
And towards the insurance considerations, if you decide not to rebuild, the carrier is not going to give you the replacement cost of what it would cost to rebuild. They're going to deduct depreciation. So if you got a 50-year-old community and you got a $13 million policy limit, you're not getting $13 million. That said, the land itself still has tremendous value to a developer, potentially. And it's Los Angeles. Land is very valuable.
Right. And then the only other thing I was going to add, the other question we're getting versus, in regards to rebuild or not, the other a different type of question we're getting, well, okay, we're going to rebuild, but what if we have owners that walk away? They say, okay, great. Like you have a 20-unit community and you guys are going to move forward with rebuild, but 5 owners are like, you know what? We're out. Like we're not going to pay that assessment. We're out. We're gonna walk away from our property. You just follow your normal collection process, which is they're still the legal owners. So if you were going to do an assessment on top of what is needed from the insurance proceeds and your reserves, you would just move forward with a lien. It's likely the bank is going to foreclose, but you still record a lien on those owners who have walked away. You might get a payout if there is an overage after the bank is paid from their foreclosure, but you will handle it just like you do if an owner is just not paying their assessments, if you have individual owners walking away.
And you should have loss of maintenance fees as part of your fire policy. So if the owners they walk away and the dues become uncollectible, that could be helped out by your insurance carrier until you're able to find somebody to cover those dues. So the next question is the California Fair Plan. And I think this is a little jarring. Just want to talk about the Fair Plan. We estimate 22%. The Fair Plan disclosed that they cover 22% of the structures in the Palisades fire. That's estimated at $4 billion. 12% of the structures in the Eaton fire. That's about $775 million. The Fair Plan only has $377 million in reserves. The Fair Plan has to pay the first $900 million in claims before they can tap into their reinsurance. Reinsurance is the insurance for the insurance carriers. The reinsurance would pay the next $4.9 billion. So the Fair Plan is responsible for losses in excess of $5.78 billion. This is going to be a lot higher than that. Now, the Fair Plan has a provision in their policies whereby they can special assess policyholders for whatever they need to cover the losses. So you could be living in Bakersfield, nowhere near these fires, Sacramento, wherever you are, and you might get special assessed for your share of what's needed to cover the gap. Now, they've been talking about bonds or something to cover that as well. I don't know what'll happen, but just know that that is a potential loss for you. If you're going to be in the Fair Plan, you could be special assessed for other people's losses. It's the carrier of last resort. The Fair Plan is not its own insurance carrier. It is all the insurance carriers in California participating and financially backing the California Fair Plan, but only to those limits that are listed there.
So who's responsible for what? That's important. What the biggest questions I'm getting from my clients that were impacted, whether very little impact, just a little smoke damage to total destruction, is what are we responsible to actually build back or repair? Are we responsible for soot removal from the exterior of the buildings? Are we responsible for roof damage? It's the same question that you would get if you just had a roof leak, right? So it's a matter of understanding what the association is responsible for. So this is definitely a legal question. So you should definitely consult your legal counsel to review your CCNRs. If you have a maintenance matrix, that also helps. Looking at your condo plan, if your condos, as far as who owns what components of the entire community, it's very important because that's going to be part of the process, is understanding what the association has to cover either through insurance or assessments, and what needs to be covered by homeowners through their HO6 policy.
And if you don't have one of those matrices, I believe is the plural.
That's right.
Thank you. Then
Sorry.
you should get one, because that's going to be very helpful for the adjuster on the loss as he's looking through. If you've got a very clear matrix, that's very beneficial. It's going to speed things along for you.
Absolutely. And so again, just like like we just said, so HO6 policies are super important. Even if you were not impacted by this fire, you should use this as an example to scare your owners to understanding the importance of getting it now. If you're spared from any damage from these fires, it's a blessing, but that doesn't mean that you may not be next in the next natural disaster that happens. Every owner needs an HO6 policy, and it helps to fund with special assessments. If a special assessment is levied, they will pay a portion of that depending on your policy. If you have to move out and get alternative living and temporary housing, they will pay for that. They will pay for personal property damage. It's not that expensive. It is honestly beyond me how people live in common interest developments and do not have an HO6 policy.
And if those policy limits are not high enough and the board levies a special assessment, your loss assessment coverage could step in and help you.
Exactly. So it's a no-brainer. So if you were not impacted by the fires, you should use this as an example to preach to your members why they need to get it now, because you are lucky and you guys may not be lucky next time. Obviously, like we talked about, common area repair and replacement is an association responsibility. If it's not covered by insurance and you don't have any money in your reserves to cover those, can you do an emergency assessment? Absolutely. Because there's a life safety issue and it's probably also an unforeseen expense at the time the current budget was prepared. So there are ways that the association can raise money for those common area expenses with through an assessment.
We're going to rush through the last few slides so we can take questions. But best practices going forward, fire hardening. It's a great idea. You know, those homes that had the cement roofs were much less likely to burn. The attic vents are a significant risk. We saw that embers were floating miles away. We saw that in the last fires we had. We saw that in these fires. So they make fire safe mesh that you can put into your attic vents. You can put it into those soffits, and that will prevent those little embers from getting up into your attic and starting a fire. The attic is the driest place in your house. Yeah, it's going to go up if those embers get in there. Flammable objects around the home. The Department of Insurance has been pushing this Safer Than Wildfire initiative, which is a great idea. You're not going to see any insurance premium benefits from doing it, but you're going to see your homes hopefully live and make it through the fire that comes through your area. And that should be incentive enough for you. Take a video of all the belongings in your home. The insurance carrier is going to try to piece this together after the fact. If you walk through your home right now and take a 2, 3 minute, 5 minute video looking at all the property that you have, like, look, this is a really nice TV. You can see it right here. If you know what brand it is and the model, go ahead and put that in there. They want to see all the belongings because you're going to struggle to remember what you had in your home after the fire. You're going to be traumatized completely and trying to go through receipts that you don't have anymore because they burned down in the fire. So I would highly recommend you walk through your home, take a video, put it in the cloud somewhere. This was another thing that came up with the State Farm adjuster I talked to, where personal artifacts. There was a State Farm loss that had an $11 million art collection, and that's more than the cost to rebuild the home in the Palisades. So increase your budgets. If you do nothing else, the cost of insurance is going to go up. It was already astronomical and unsustainable. So if you do nothing else, increase your budgets again, because we don't know what this is going to do to the market. The reinsurance pricing is going to go up. That's the insurance for the insurance carriers that I mentioned. And you're going to see carriers pulling out of California. You think State Farm wants to write any more business? No, they already stopped writing new business last year. The other carriers are probably going to follow suit. Not all of them, but some of them are going to just push away from risks that are even remotely near brush. Like I said before, a risk of 20 was considered okay. They're not going to look at a brush score of 20 the same way that they did before. We could see carriers leaving the state. We're going to see a harder insurance market. CLAC, the California Legislative Action Committee for CAI, is working on a number of options. Lisa mentioned one earlier. I'm on the task force, and one of the things that we've been trying to do is find a legislator that would do two things: author a bill for us that would define what wildfire is, because currently there's no legal definition of wildfire. So carriers can't comfortably exclude wildfire. And there's also something called the Standard Fire Policy Form in California. California is a standard fire policy form state. That was a set of documents that was written in 1943. It's 165 lines of text that was written in New York City. It doesn't deal with what we're dealing with now. And it doesn't allow for insurance carriers to exclude wildfire. So I think where we're going, if we can get an author for this bill, which we're working on, and get it approved quickly, nothing moves quickly in the legislature. But if we can get that done, what we're going to see, I think we'll see wildfires treated like the earthquake policies. Because before 1994, Northridge, all the carriers included earthquake coverage. Then they said, hey, wait a minute, this earthquake stuff is too risky. We don't want it, or we want to charge a lot more premium for it. And the Department of Insurance said, no, you can't do that. So then you saw the surplus lines market come in, and almost all your earthquake carriers are surplus lines carriers. I think we'll see the same thing with wildfire, where those carriers will say, hey, you got a 20% deductible for earthquake, and we'll include wildfire for an additional premium of X with a 5% deductible. And then you see the catastrophe managed, because you've got the master policy with catastrophe insurance with a high deductible, and that deductible is satisfied by all the personal lines carriers. It's spreading the risk out, diversifying it. So that's where we're headed. The other thing I would say is make yourself heard. Contact your representatives, your legislators from the state, and let them know your story. Your insurance premiums jumped up 3,000%. Contact them. Let them know. The more squeaky wheels we can get, the better off we're going to be, and the quicker we'll see solutions. I think it's time for questions. I'll leave this slide on.
The last thing I will just add, another thing that you can do just moving forward for future disasters like this is look at your insurance articles in your CC&Rs. What do they say? What do they require you to do? Do you have to be walls in? Can you move to bare walls? Should you lower your coverage? Really analyzing your insurance, your articles and your CC&Rs before there's a problem, like doing it now, if you are not unaffected, and maybe making a change so that you can lower your premiums or deal with different deductibles, talking with your insurance agent as well as your counsel to make those changes now. And I just want to stress the importance of having an HOA insurance agent, someone like Tim Cline's agency that knows common interest developments. Not all agents know what common interest developments are. They don't understand multifamily dwellings, and that is a big problem. So making sure your agent is very familiar with policies for HOAs will also put you on the road to success.
And to Lisa's point, please revise your governing documents now, because some of them have restrictions that are just not available in the market. They weren't available before these wildfires, and these wildfires are going to have a serious impact on the insurance market. You might not be able to get a deductible that meets your insurance requirements in your CC&Rs, or to get full coverage. If you are in a high brush zone, you might not be able to get the coverage that you need. So amending those documents and giving the board the freedom to adapt to the market is very, very important. Consult your HOA legal counsel. Robbie, were you going to field questions or provide us with the questions?
I did see Diane had a question. She said, is this also true for earthquake insurance through the state? Diane, what was this question in reference to?
So I could say, go ahead.
What it was in reference to is if we have earthquake insurance through the state, the California Earthquake Authority, if there's an earthquake in San Francisco and they got $5 million available and it's a $10 million quake, can they come and charge us down here?
I believe they can. I don't sell any policies through the CEA because we don't do personal lines policies. My understanding is that yes, they can, but with the California Earthquake Authority, they've been collecting premiums since 1994 without paying out a tremendous amount. They've had maybe some tiny small losses in Paso Robles or something, but they've got a lot of money, the California Earthquake Authority, and they've been earning interest on all that money, so they should be fine.
Thank you.
Other questions?
Do you have any other questions?
That was the only question in the chat. If you have a question,
That means we covered it all.
Come off of mute and ask your question. Thank you everyone for attending tonight. Thank you so much to Ryan and Lisa and April and Robbie for this program, and Daniel Carvo from the committee for helping to wrangle it all together.